Hi everyone, it's Kathleen here. I'm the Research Director at XTB, and what a busy day for markets. What a couple of busy days actually. We have the Federal Reserve meeting tonight. I can't even stress how important this is. It's the start of their rate cutting cycle. We have waited a long time for this. A lot of expectations are built in already. There's now a 60% chance, over 60% chance of a 50 basis point rate cut. And that's up from about 30% a week ago. So there's been a massive shift in the last week. It seems like the Federal Reserve will actually want to cut by 50 basis points because they don't want to get to a recession. So it's about preempting any kind of negative data and getting ahead of the curve rather than being behind the curve. So they don't want a recession, which is why they're going to cut by, but why we believe they're going to cut by 50 basis points. So what could the market reaction be? Because that's the key thing. The dollar has been very, very weak leading up to this. It's had a little bit of bounce in the last couple of days, and that's because we got slightly stronger retail sales than expected. Parts of inflation has been sticky as well. So it depends on their message. Are they going to cut by 50? Is it going to be a dovish cut or a hawkish cut? We think they might err on the side of hawkishness. However, that could limit any further dollar downside, but I still think that the 50 basis point cut is going to prolong this economic cycle, and that's going to be good news for stocks. When it comes to the dollar, if we look at chart one, great. So chart one shows the interest rate differential between expectations for the UK and the US for the December rate cut, so the December rate decisions. As you can see, there's a lot more expected cuts in the US than the UK. That's why it's slanting upwards. And it also shows sterling versus US exchange rate. So that's the white line on the chart. So the red line is the interest rate differential. So the differential in expectations between UK and US rates by December. The white line is the cable rate. They've very much been moving together. Now, what this means is if there's any reduction in expectations about how much the Federal Reserve will cut by December, right now there's over 100 basis points well over 100 basis points of cuts priced in, which we think is excessive, then we could see sterling come under some pressure. So that's definitely something to watch, that the dollar could make a resurgence if they decide to do a hawkish 50 basis point cut later. Now, if we look at chart two, which is just coming up now, and chart two shows two things. It shows the S&P 500, which is the white line in this chart, and the S&P 500 equal weighted index. So the white line is the market cap weighted index, is very heavy towards tech. The orange line is the equal weighted index. So what that shows is that, as you can see, the equal weighted index has been outperforming the S&P 500. If they cut by 50, we think that is going to continue. However, if they shock the market and only cut by 25 basis points, then we could actually see the S&P 500 equal weighted. So all those consumer stocks, retail stocks, that could come under pressure. And we think that would be a really bearish shock for the markets. Thanks for joining, and we hope to see you soon.